Hey guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you information and meet you where you are financially so that you're able to stick to your budget, manage to pay off your debt, and begin to save on your path to building wealth. Today, guys, I want to talk to you about how millionaires actually borrow money. If this is your first time joining me here on the channel, go ahead and hit that subscribe button and you'll be notified every time I upload a new video. So often we talk about millionaires in the sense of how do they save, what did they do to manage their job, manage their careers, and how did they bring in income. And all that information can be helpful because we're looking at people who seemingly have the success that we're trying to attain. And oftentimes you can get the success that they have by just simply implementing their thought processes and habits. Well, the same can be said about borrowing money. It's no secret that in this culture that at some point you may have to borrow money, mostly if for the very least for a mortgage. There are very few people who are actually paying for their full mortgage in cash. That's nothing wrong with that. But one of the things that millionaires do, or watching how they borrow money, helps them to navigate the paths of life, the challenges of life, the life events while they're borrowing money, and their process by which they borrow money. So number one, that they can get rid of the debt, but also that they're making a good financial decision. One of the things that they do first is they always get options. We talk about this a lot here on the channel, or just if you listen to a lot of different podcasts. You have to have several options to understand what benefit you're getting in choosing a lender, a partner. They don't simply just have several options. They consider all the scope. So if they have to go outside their state, if they have to go online, if they have to do something, if they're borrowing money and getting information from some place that seemingly may be unorthodox, they're willing to do that because at the end of the day, it's all about them getting a good deal. So when you look at your options to borrow money, don't just look at what is in front of you. That's not your only option. It's never your only option. You need to go get several options so that you can, number one, be educated about what is the true cost of this. That way you'll be able to register, is this a fair price, or should I wait, or should I be going a different path with this decision? So first, you want to make sure you gather options. Second, it's all about the details. They're educated about the purchase process. So oftentimes they know what is a true cost that is fair, that is part of the process, versus what is just a fee that is being charged where somebody could profit. And they're very meticulous about those fees because they want to understand each cost. It's not just a general sense. Don't get me wrong, you do like to have a person walk with you as far as a salesman through the purchase process of any purchase that involves lending credit, but you do have to understand that is their benefit, that is their job to help you get into or take the loan from them. So it's your due diligence to actually look at the fine print, the details, every single fee, and that is what you're comparing when you're shopping your rates and costs. Third, they're very aware of where their credit is, so they know what they qualify for. Oftentimes when you're borrowing money, the first time a lot of people look at their credit is when they're actually applying for a loan. These individuals, as far as millionaires, they already have a good pulse of what their credit is and what they qualify for. They've already done the math and they know what is too much for their situation and what is of value. And it's important that you understand at all times that you should know what your credit score is because you need to know where you qualify for. Third, they don't just fill out applications seemingly. They're very, very educated. Hey, I can simply have a conversation with X lender or personal banker or whoever, and they'll give me a lot of the information without me ever having to do an application. That's important because we all know those credit pulls, if you do them frequently, can add up. So next, they also look at what's their long-term game plan with this debt. So are they going to pay it off? So let's not be deceived that millionaires don't borrow money for cars or don't borrow money for homes. They do. In fact, there are many people that I work with on a daily basis that are millionaires and they still have a mortgage on their home. It's not much, but they still have it. Suffice to say, it's not impacting their financial decision, but when they look at what it's doing to their cash flow and how much more money they can have, they're progressively getting rid of it but they're taking their time. And again, when they're a millionaire, at any point, if they just got sick of it, they could just pull the money out and go pay for it. But they look at the value of where their money is and how it's growing, and then they look at the cost benefit of it. So a good example of this is I had a client about a year and a half ago, and this client was purchasing a new Cadillac, and he really had been looking all around, scouring the country. Well, he ended up borrowing the money for the Cadillac, and he was able to get a 1.9 rate, and he borrowed about $25,000. Sounds like a lot, right? Well, the 1.9 rate over that 60-month period, he was only paying $1,500 to borrow that money. So for him, it was more valuable for him to have full power of his cash, or he was willing to pay $1,500 for 5 years of borrowing money, and he likely wouldn't keep it for 5 years, but he was able to keep his cash for pennies on the dollar just to borrow the money and make his purchase. Needless to say, it was very, very eye-opening, and it's a different way of doing things. But again, we want to aspire to get to the point. It's not the fact, just like a credit card, that you borrow the money. It's the fact that you don't have the money in the bank to pay it off. So that's the point of when you're borrowing money and you don't have the money to pay it off. You want to be a lot more conservative about how much you're buying till you get yourself to a position that you have a little bit more full control of that situation when you're borrowing money. We all know the trap debt can be, and there is responsible ways to not only borrow debt, manage debt, and get rid of debt. But we do have to be cognizant of what are the things that go into borrowing money, what are things I can control, and also how can I do this in a responsible fashion that doesn't put further damage to my financial situation. I hope you guys enjoyed this video. If you like it, go ahead and give it a thumbs up. If you haven't already, please subscribe to the channel. And I do want to make mention before leaving this video, you have an opportunity to get 4 free stocks from Webull just by opening a new account and depositing $100 on the platform. Let me know which stocks you get down in the comments below. I can't wait to see you guys in the next video.